Hey, what's up everybody? It's Mike. I hope you're having a great day. In today's video, I want to walk through some of the new regulations and reporting requirements when it comes to virtual currency transactions. These are going to go into effect starting in 2023, so that's coming up pretty soon. And they're going to start to affect your tax return coming in 2024. So whether you're a business or an individual investor, it's good to know the rules that are coming. That's what we're going to cover in this video. On November 15th, 2021, President Biden signed the Infrastructure Investment and Jobs Act into law. Contained within this act, there are certain provisions regarding information reporting for digital assets. Quite frankly, the Internal Revenue Service has been trying to get their hands around virtual currency transactions for quite some time now. They estimate that the cryptocurrency market is worth roughly $1 trillion. Yes, $1 trillion. And the IRS estimates that if they can increase the reporting requirements, because they feel a lot of investors are bypassing those requirements, then they could potentially collect an additional $30 billion in revenue. Truthfully, cryptocurrency really has not been around that long. The IRS, if you remember, they released their first guidance surrounding virtual currencies back in 2014. And that's when they said, okay, the currency should not be taxed as currency, but they said instead the virtual currency should be taxed as if it were property, or much more like a stock type of transaction. The next major regulation that came out was in 2017 when the IRS, through a John Doe summons, was able to gain access to Coinbase records for any individual or business for that matter that had more than $20,000 in virtual currency transactions within a single tax year. If we go from 2018 until now, what we see is that the IRS is becoming more and more aggressive going after this tax revenue. And what they started to do over the past couple of years is issue letters 6173 or 6174 to taxpayers if they believe those individuals or businesses were underreporting their cryptocurrency transactions and had not properly reported their taxes. And if you've noticed now over the last couple of years on the tax form, I think it started like around 2020 or so, but there's a question on the tax form now when you go to file your taxes that basically says, did you buy or receive or exchange or sell any type of virtual currency during the year? And you are required to answer that question as a taxpayer before you can file your return. And just on that brief history that I gave you, you can see they're slowly honing in to try to get their hands around all this tax money that they believe has not been properly reported. The infrastructure bill amends IRC section 6045, requiring any person who, for consideration, is responsible for regularly providing any services, effectuating transfers of digital assets on behalf of another person, defined as a broker, to report digital asset transactions, cost basis, and sales proceeds on Form 1099-B in a similar fashion to other specified securities like stocks. The infrastructure bill defines a digital asset as any digital representation of value which is recorded, cryptographically secured distributed ledger, or any similar technology as specified by the Secretary. This means cryptocurrency will now be subject to the same reporting requirements as stocks and bonds. Failure to report crypto transactions could result in a $280 penalty per customer, with a maximum penalty of $3 million. The second major aspect of this bill is this. The infrastructure bill also amends IRC section 6050I, which requires any person engaging in a trade or business that receives more than $10,000 in cash in one transaction or two or more related transactions to file a Form 8300. Form 8300 reports the payer's name, address, and taxpayer's identification number, among other items, to the Internal Revenue Service. Under the new provisions in the infrastructure bill, digital assets are now considered cash, and such crypto transactions in excess of $10,000 must be reported on Form 8300. For example, this means businesses that accept virtual currency as a payment may now be required to report transactions above $10,000 to the IRS. Failure to file Form 8300 could result in civil consequences and felony charges. In the first part of the bill, what it's basically saying is that if you're a financial institution or someone who helps coordinate the exchange of virtual currencies for another party, then you might be defined as a broker. Now, brokers that are already doing this, that are well known, would be Coinbase and Robinhood. They're ahead of the curve. They have the resources to track this information and all this and that, and they're already doing it effectively. But for a lot of businesses out there that might now become defined as a broker, there's really no guidance that has been released yet. Be looking for it, because it's supposed to come out hopefully later this year or early next year, I would hope, because there's a lot of individuals and businesses who are not going to know if they fall into the broker category until there's a clear definition of what they're trying to communicate here through this bill. Also, if you are considered a broker because of this new bill based on the way you do business, and if you help with the exchange of digital assets on behalf of another person, how do you know the cost basis of those assets of the other person? So there's going to have to be some ways that they can access this information or figure out how to easily report this information. Otherwise, it's going to be a tremendous burden on financial institutions or small businesses or whomever, individuals who are having to do these reporting requirements, who are not used to issuing people 1099-Bs. If you're someone who routinely buys, sells, or exchanges cryptocurrencies, and you've not done so already, it is imperative that you make your best effort right now to get ready for this, to track your true cost basis of what you paid for that crypto, so that you truly know what the cost basis is. Because if you later on down the road are transacting with virtual currency and you get a 1099-B from a whatever financial institution, let's say it's not from Coinbase and not from Robinhood, but some other firm now because they're required to be a broker, what if those numbers they report to you on the 1099-B are wrong? If you don't know your cost basis, if you haven't tracked that yourself, how are you going to defend those numbers? So you want to have those records available. But as individuals, if you've already been reporting your cryptocurrency sales and exchanges over the past several years on your tax return anyways, you're probably going to be fine. There's probably not too much to worry about here. But just know that if you want to pay for something in virtual currency, that there's going to be new reporting requirements, and just expect to receive more tax forms in the mail starting in 2024. Let me know what you think of this new bill down in the comments. Remember, it starts in 2023, but won't really affect your taxes until 2024. Once again, my name is Mike, owner of Mike Kelly CPA. For more videos on how to better operate your own business, stay up to date with accounting and tax law changes especially as they relate to investments, make sure you're subscribed to the channel. I'll have more content coming out later this year. And until next time, I hope you have a wonderful week. Live life uncaged, and I'll see you all in the next video.